The Southeast is undeniably the entrepreneurial engine of Nigeria, from the industrial hubs of Aba to the massive commercial corridors of Onitsha. We know how to build businesses. But building a business is not the same as building generational wealth. For decades, many of our most successful family-owned enterprises have avoided the Nigerian capital market, opting to stay private. Today, we are asking the critical question: what is the Southeast leaving on the table? From accessing long-term capital to financing regional infrastructure, we are exploring the untapped wealth of the NGX. I am Cherry Ojukwu. Welcome to the Eastern Business Report. Let's get right into it. Our guest, Professor Uche Owaleke, who is Nigeria's first professor of capital market and also the president Capital Market Academics of Nigeria, will be joining us for this segment. You're very much welcome to the program, Prof.
Thank you so much, Cherry. It's indeed my pleasure to be on your show.
Thank you, sir. Right, so Professor Owaleke, the Southeast is the undisputed commercial engine of this country, yet many of our massive family-owned conglomerates in Aba, Nnewi, and Onitsha refuse to list on the stock exchange. Is this purely fear of losing family control, or is there a deeper systemic disconnect between the NGX and the Igbo industrialist?
Thank you, Cherry, once again. Well, to start with, let's understand what the capital market does, the role that it plays. Okay. The capital market is any mechanism that, of course, brings together savers and those who need the funds. We usually describe them as deficit units and surplus units, for the purpose of capital formation, essentially. So the capital market is where long-term funds are mobilized. The capital market is where businesses can go and raise long-term capital. It's also where governments can also, go and raise long-term capital, as opposed to the short-term funds that come from, say, the banks, from family members, or even from one's personal savings. So what we have seen, just as you rightly mentioned, that is characteristic of businesses in the Southeast, is that a number of them don't appreciate the potentials that we have in the market, in the capital market, in general. So they start with their own funds, family funds, and even when the businesses, get started, they tend to grow the businesses using retained earnings. And of course, from time to time, they borrow from banks, short term. But of course, that limits the extent of expansion that the business, can do. If you compare the personal businesses we have, private businesses we have in the Southeast, with some other businesses outside the Southeast that, find their way in the Nigerian exchange, for example, which is the major platform for raising the capital, you will realize that these businesses, cannot be compared to the ones on the exchange. So that is what our people have failed to, realize. And I think you alluded to some of the reasons. One is the issue of loss of, family control. Of course, when you list your company on the exchange, there is that risk that it could be subject to you're diluting control, more or less. That's one. Number two, some of them too may not want their affairs to be made public, to be made open. Once you come to the market to say you are listing your company, it means your financials must be open. You must submit your financials quarterly, half-yearly, and annually to relevant authorities, to the exchange itself, and to the Securities and Exchange Commission. So some may, out of not being open, not being ready to be open, may not want to do that. So you have the issue of the fear of dilution of control. You also have the issue of being secret, or discreet rather about the company's affairs. And then there's also the issue of costs. Of course, when you are raising money from the market, when you're listing, there are cost implications, for doing that. But the benefits far outweigh the costs of approaching the market. First, you have access to wider capital. You can raise more money to grow your business. Number two, your business also becomes, if you like, exposed to the point where you can also even attract international collaboration, international partnership, international investors, in your business. And of course, your business reputation is even enhanced in the sense that even when you want to go and borrow money, the fact that you are listed, gives you an edge, because listing tends to enhance your corporate governance when it is known that your affairs are public. So it's even easier for you to borrow. You borrow at a cheaper rate. You have better reputation as a firm, and you also have access to wider capital. So people need to understand that. I want to see going forward, I want to see the likes of Innoson, for example, getting listed, and some other big businesses we have that have scaled to the point where they qualify for listing. So the Lagos exchange, which we know as a Nigerian exchange, isn't just for businesses that are in Lagos. We also want to see Southeast companies, listing there and taking advantage of the benefits that are associated with listing. The good thing, or the good news, is that I'm aware that some of our people too are making efforts to establish a stock exchange in the Southeast. One of them that I know that's the process of that will soon be launched is Conti Securities, which if everything goes well, will be launched by September. So when that happens, that opens the window for our people in the Southeast businesses to also list on that exchange.
All right. So basically, the conversation needs to shift from losing control to sharing risk and scaling globally. All right. So basically, we often see founder syndrome play out here, where a highly successful enterprise dies with its creator. How exactly does listing on the capital market force the kind of corporate governance that guarantees a business outlives its founder?
Yeah, there are requirements for listing, and first you are expected to, make available a certain number of your shares, to the public. And that is also what our people need to understand. When I say I mean those who own businesses, that even when we say when we encourage businesses to list, it doesn't mean that you are going to put out there 100% of your shares. Of course, you're still going to do it in such a way that you retain control. Look at what Dangote is doing. Dangote Cement is listed on the exchange, and Dangote Cement is owned, primarily by Dangote. So he has not relinquished, so to say, the control of his company to outsiders. He's still in control. Now Dangote is also planning to bring his refinery. So the question to ask is, why is somebody like that, who is also considered rich, who can finance many of his businesses without even coming to the exchange? Of course, he set up that refinery without the exchange. He borrowed money, yes, we understand, but it wasn't from the capital market. But now he's thinking of coming to list the company on the exchange. There must be a reason for it. Okay, and that is what our people are also missing. So you are not relinquishing control. Even when he lists, he's talking about listing just 10% of the value of the company. So our people too, who own businesses, should be thinking of coming to bring a fraction of the shares of their company on the exchange to be able to enjoy the benefits. Okay, they can bring like 10%, 15%, provided that meets the minimum float. So there are requirements that must be met. One of which is, as I said earlier on, opening up, bringing it, some number of shares, into making them available to the public. And of course, the starting point is even to change the legal status of the company. For a company to be listed, that company must be a public limited liability company. So you have to first of all register it, change the status from a private limited company to a public limited liability company. That's the first stage. The second stage is now to begin the process of approaching the exchange, through, of course, appointing issuing houses and all the relevant people or stakeholders that will help you package the issue and do what we call an IPO, initial public offering, if you want to raise capital. But if you don't want to raise, even if you don't want to raise fresh capital, and you want your shares to be publicly traded, okay, you want your shares to have liquidity, you can also come to the exchange and through what is called introduction, listing by introduction. In that case, you're not offering new shares. But just to answer your question, one of the requirements is that you are expected to submit your financials. So that means that presupposes that you also have to have records. Your bookkeeping, your record keeping, must be in line with standard. So if it's in line with standards and you are submitting them to the exchange, to the Securities and Exchange Commission, which is the apex regulator, it imposes some sort of corporate governance. What is corporate governance? Corporate governance is about ensuring that a company is well run. So when you have that kind of system framework in place that ensures that you have records, the auditors come, they check your books, and those records are made public. That is one way of, as I said earlier on, ensuring corporate governance. And when corporate governance is enhanced, okay, that adds to the reputation of the company, and also that ensures longevity of the company. So most of the time you see that the companies that are listed on the exchange outlive the ones that are not listed. The ones that are not listed are continuing to run as family businesses, continue to run as private companies. When the real owner dies, then there is the problem, because the governance structure is not such that that will ensure continuity, business continuity, even after the owner dies. So you now find some of them collapsing, the children, for example, not managing the business well, and then that becomes the end of the story. So to ensure continuity, I will advise businesses that are in the Southeast, I will advise that they go and list on the exchange or on any other exchange. It doesn't have to be the Nigerian exchange. As I said, some other exchanges are coming up. They can list. What is important is that they have this avenue where they can also raise more capital and ensure that their reputation is enhanced.
Very well. So it's a bitter pill of transparency, but ultimately corporate governance, is what guarantees the company outlives its founder. All right. So,
absolutely.
Yeah. So there's a perception that the capital market is an exclusive club for multi-billion naira giants like Dangote, as you mentioned, for the mid-sized manufacturer in Enugu looking to scale. How practical and accessible is the NGX Growth Board?
Yeah, very, very much accessible. And I want to commend your station, for even doing this.
Thank you.
People need to be aware. There's a study that shows that capital market literacy in the Southeast is very low compared to other regions of the country, and that's why you find in the Southeast a number of businesses, not even bothering about capital market, not just for business, even for individuals. How many individuals in the Southeast, have investments in the capital market compared to those in the Southwest, compared to those in other parts of Nigeria? So our people are not taking advantage of the wealth creation ability or potential that the capital market provides. Okay, so we are contented with investing in the trading that we do, and then investing in land and some other assets that may not have that liquidity. But when you also invest in the capital markets, you buy shares, you buy bonds. For example, you are diversifying, so to speak. What you have, and that is one way of growing wealth. If you get a good company stock, for example, and that company is paying you dividends, you have a company with a track record of dividend payments, for example. You also have a company whose share price appreciates over time. That is wealth, creation in action. And our people are missing out when it comes to that. If you take if you disaggregate the investors we have in the market today, you will realize that the Southeast people of our Southeast extraction, they are few. Today we say we have less than 1 million active accounts, in the capital market. Less than 5 million people are investing, less than 1 million very active. If you even check that 1 million, the Southeast people are missing in action. And that is why we need a lot of investor education, a lot of sensitization for them to realize that the capital market has potentials not only for businesses, but also for individuals. We used to have an office of the Securities and Exchange Commission in the Southeast. We also used to have a branch of the Nigerian Stock Exchange in Onitsha. But these branches have been closed, and that has also affected the level of awareness, because when these branches were there, they were helping in their own small way to provide awareness. But that is no more, and that is where stations like yours can fill the gap, to help educate our people so that they can also be part of this wealth creation that the capital market provides. So for businesses generally, it is important they are aware. For small businesses, that there is a growth board. The Nigerian Exchange has the premium board, has the main board for large businesses, and also has the growth board. The requirements for accessing the growth board, the requirements are less stringent than the one you have for the main board. And the main board is less stringent than what you have for the premium board. So what they need to do is to be familiar with the website of the Nigerian Exchange, because for now, that is the main boss we have in Nigeria. While we await the others to spring up, we also have other exchanges, like we have the NASD. The NASD is for public limited liability companies that are not listed. We also have FMDQ, but for now, FMDQ does not trade in shares. They're mainly focusing on fixed income. So businesses that want to list for now can only go to approach the Nigerian, exchange. And I've said the requirements. They have to first become public limited liability companies, and then approach the exchange for the process of listing. The website is there. The website gives the requirements, what they need to do to be able to list. And I think we have a good number of businesses in the Southeast that qualify, that have scaled to the point where they can confidently list on the exchange and then begin to enjoy all the benefits associated with listing.
Okay, that is a vital takeaway. So the NGX board exists specifically so you don't have to be a billion-naira conglomerate to access public capital. All right, so Southeast governors are currently taking on heavy domestic debt from commercial banks to fund infrastructure. These are often expensive, short-term goals. How much cheaper and more efficient would it be for these states to issue municipal or sub-national bonds on the capital market instead?
Thank you, Cherry, for that very important question. It worries me. It worries me that the Southeast states, again, are not taking a full advantage of the capital market. Remember, when I say the capital market, I mean long-term financing. Okay, any mechanism that brings about long-term finance, as opposed to taking money from the banks. I understand the situation because I once served as a finance commissioner in my state. And I know that states are usually more disposed to just taking money from banks to finance projects. And banks can only give you short-term loans, short, if you're lucky, medium-term loans. And when you use them to finance projects, that becomes the case of funding mismatch. And that's why you have a number of states, having this debt challenge. So where to get long-term finance is actually the capital market, not the money market, not from banks. Now, so far, going by my findings, only Imo State and Ebonyi State have approached. Only these two states have approached the capital market for funds by way of issuing bonds. These are the two states that have issued bonds so far. I am not aware that Anambra, Abia, or Enugu states, have done that. But these two states have gone to, raise bonds. So if you look at the potentials we have in the Southeast, they are enormous. Just as you rightly mentioned in your introduction. Take the case of Anambra, for example. Anambra, that Anambra, Imo, and Abia, they have oil, they have gas. Then you have the case of Enugu. Enugu, there is coal, energy state, Ebonyi, agriculture, known for rice, and so on. And these states also have, a lot of potentials in terms of human assets. The largest, if you like, in Nigeria today, I'm sure by the time you take the number of diasporans abroad, Southeast will rank very high in terms of number of Nigerians who are abroad. Aba, in Imba City, for textiles, for an industrial giant, potential industrial giant, just like in Nnewi, you also have in Nnewi. Okay, so you have a number of potentials in the Southeast, but the challenge we have there is that infrastructure is weak. Infrastructure that will support massive industrialization is weak. Why is there no rail line, for example, that runs from, say, Aba, Owerri, connecting Owerri to Onitsha, then maybe even connecting the port, Onitsha port, and then Enugu and Abakaliki? We don't have that kind of infrastructure. Okay, we don't have integrated electricity, power projects across the Southeast. A major problem in the Southeast, in my view, is this idea of thinking that we are 5 isolated states. So you find states doing things in silos, fragmented efforts. There's no coordination among the 5 states in terms of infrastructure, development. You see, you can liken what is going on now to you have 5 wealthy men who live in huts. They are living in huts where a mansion is available. That is just what is happening. We have the potentials, okay, and you have a mansion, the potential, but we are not taking advantage of that. And that mansion can only happen when we have shared infrastructure development. And that is what the capital market, can finance. We cannot finance mega projects in the Southeast relying on our regular monthly budgetary allocations. That is pittance. We also cannot do that, with bank loan. We can only do that with long-term finance, which the capital market, can provide. Which is why I have often advocated that why can't the Southeast states come together, the governors come together, and then decide to issue bonds jointly. So as opposed to Imo State going to issue bond, or Abia going to issue bond, individually as a single state, or Enugu, they do it together. Because when they go individually to the market, it becomes expensive. It's expensive for them, and they can only raise very, small amount of money. Imo, for example, issued, I think it was 18 billion naira, just 18 billion. So, but when they do it together, okay, they are in a position to raise bigger sums. They're in a position to finance bigger projects. They're in a position to share risks, okay, and they're also in a position to borrow at a lower cost because of the fact that they are doing it, together. Yeah. So I think what we require in the Southeast is not individual effort, but a pooled bond infrastructure. So the Southeast states can set up an SPV, what I call an SPV, that can issue these bonds on their behalf. yes, I'm aware we have the Southeast Development Commission, but that's set up by the federal government recently. We have the Southeast Investment Company, which remember the vice president came to the Southeast and announced Southeast, but it's also a subsidiary of the Southeast Development Commission. And all along, we have also had the Southeast Regional Economic Development Commission. But this commission has all along been involved in organizing economic summits. So these are not, we require them, but I am saying that if we need to go to the market and go jointly, we need an SPV that should be set up by the 5 eastern states for them to now go and issue the bond. A 5 trillion naira bond is what I'm recommending. That can be done in tranches, and for them to identify one powerful transformational project that the 5 of them can undertake together. And I'm just giving an example. If you have that rail line that runs that we are linking to the Onitsha port, that will be a game changer. So that is what I think they can do, with guarantees from the multilateral institutions, from African Development Bank, for example, then tying the repayment to their FAC, whatever they get as by way of FAC allocations. I mean, a small percentage can be tied to the repayment of such loans. Okay. So for me, that is the way to go, as opposed to these individual efforts and then trying to work in silos, doing independent power projects in silos. There is no effort to do them holistically.
Yeah. All right. Thank you so much. This has been an insightful session, and thank you. That's the much that we can take on the Eastern Business Report. The Afia Business Morning returns tomorrow. Many thanks for staying with us. My name is Cherry Ojukwu. Coming up next is Afia. Bye for now.